Police car light, you need to see this before making your next move. The crypto market just saw over $1.6 billion in liquidations as Bitcoin struggles to hold support above $109,000. While fear grips the market, with the fear and greed index plunging to 28, some huge developments are happening behind the scenes. The SEC just approved a new kind of ETF that will hold not just Bitcoin and Ethereum, but also major altcoins like XRP, Solana, and XLM, potentially unlocking a flood of institutional cash. At the same time, major corporations are quietly buying up billions in Ethereum, locking it away, and squeezing the available supply. With analysts pointing to historical data that suggests a powerful Q4 rally is ahead, the question is this dip the final shakeout before the next massive leg up? This is a critical moment for your portfolio. In the latest video from Altcoin Daily Channel, the discussion centers on why Bitcoin's price has been stagnant. The video presents macro investor Raoul Pal's theory that the traditional 4-year Bitcoin cycle is extending to a 5-year cycle. This shift is supposedly tied to the global business cycle, which is tracked by the ISM Manufacturing Index. Pal's reasoning is that the maturity of U.S. debt was extended from 4 to 5 years during 2021 to 2022, which has consequently pushed out the business cycle by a year. This theory suggests that the peak for the current Bitcoin cycle might not occur until the second quarter of 2026. The video explains that the economy is currently in a contraction phase, with the ISM below 50, which is why riskier assets like Bitcoin aren't surging. This period is framed as a potential buying opportunity. The conversation also turns to developments in the altcoin space. It mentions that Jason Calacanis of the All In podcast has launched Stillmark Core Capital, a new fund focused on the AI project Bittenser, TAO, and its subnets. Another altcoin, CC, is mentioned for its recent partnership with Google's agentic payments protocol AP2, which aims to enable AI agents to conduct transactions. Finally, the video touches on Swissborg, noting a prediction from the platform's own Alex that the token could exceed $3. This is based on their new program to use 50% of trading fees for token buybacks, which they claim could create significant buying pressure of $1.6 million per month. The idea of a 5-year Bitcoin cycle tied to macroeconomic shifts is a compelling narrative, especially as the crypto market becomes more intertwined with the global economy. The latest ISM Manufacturing PMI data shows a reading of 48.7, which is still below the 50-point mark that separates contraction from expansion, lending some weight to the video's premise that the broader economy isn't firing on all cylinders yet. Bitcoin is currently trading around $109,700, and its recent sideways price action reflects a market that seems to be waiting for a clear directional catalyst which aligns with this macro-focused theory. In the latest video from Crypto Rover channel, the main focus is on Bitcoin's critical test of a support level that previously acted as resistance for a year and a half. The speaker states that holding this level, referred to as the green box, is essential. A break below this support could indicate a bearish distribution pattern, leading to further downward movement. According to a liquidity heat map, downside liquidity has been captured, with significant liquidity now sitting higher around the $118,000 to $119,000 mark. The analysis suggests the bull market top might be approaching within the next 4 weeks, with a potential best-case price target of $137,000 for Bitcoin. Ethereum is also highlighted as it pulls back to a crucial level around $4,000, which was a former resistance. A previous successful test of this level led to a rally towards $5,000, suggesting this could be a good accumulation zone. A key point is the negative funding rates for both Bitcoin and Ethereum, which means more traders are shorting the market. This scenario often precedes a short squeeze where prices are forced to move up rapidly. The video's technical analysis hinges on Bitcoin holding a key support level, a classic make or break scenario. As of today, the market is showing signs of weakness. Bitcoin is trading around $109,618, and Ethereum has dipped to about $3,946, falling below the $4,000 psychological level mentioned in the video. This week has seen a significant market downturn, wiping billions in value as Bitcoin dropped below the $112,000 mark and ETH hit its lowest point in nearly 7 weeks. This aligns with the video's warning about the importance of the support zone. In the latest video from Crypto Tips channel, the host tells viewers not to worry about Bitcoin's minor price correction, framing it as a small dip. The conversation then shifts to some big financial news, including a potential $500 billion valuation for Tether, which could make its chairman incredibly wealthy. The main focus is the idea that an alt season is just around the corner. This is suggested by the increasing open interest in altcoins, which shows traders are getting ready for more volatility and are moving down the risk curve. The speaker also touches on the impatience of new traders who panic over small dips, unlike in past cycles. He criticizes the fake profit and loss screenshots often seen on social media. On a larger economic scale, the video points to Federal Reserve's uncertainty about inflation, which the host believes is much higher than reported figures. He also mentions the U.S. Treasury buying back its own debt and upcoming interest rate cuts in 2025 as signs of a struggling economy. The speaker predicts a massive crash in the next bear market that will be much worse than the FTX collapse and warns that rising U.S. money supply, now at $22.2 trillion, is a major concern. Watching this video provides an interesting snapshot of market sentiment. The speaker's confidence in an imminent alt season is a recurring theme in crypto, and right now, the altcoin season index is indeed high, sitting at a value of 67, suggesting many altcoins have been outperforming Bitcoin over the last 90 days. The discussion around Tether's valuation has also gained traction, with recent reports indicating Tether is exploring a fundraise that could value it at nearly $500 billion. In the latest video from the Lark Davis channel, the discussion centers on whether crypto is still the best place to build wealth when compared to the booming tech stock market. While Bitcoin is up 38% in 2025, tech stocks like Nvidia have surged over 50%, and Palantir has seen gains of 200%. The video points out that while the S&P 500 offers a steady 10% annual return, it can't match the explosive, albeit rare, gains of some cryptocurrencies. However, with the current AI trend, big tech stocks like Microsoft and Google are hitting all-time highs, with returns that are closely mirroring Bitcoin's performance. The video also touches on the fact that over 90% of crypto tokens might not survive the next cycle, making stocks with tangible products seem like a safer bet. A comparison is made between Amazon and Solana, with Solana showing a 100% gain compared to Amazon's 38% in the same period. Similarly, Bitcoin is shown to have outperformed Amazon with 117% returns. The video also brings up crypto-related stocks like MicroStrategy and Coinbase, which have seen massive gains of over 2,500% and 1,100% respectively since 2023. Ultimately, the video suggests that while tech stocks are performing well, the crypto market is maturing and still holds the potential for significant wealth generation, drawing a parallel to investing in internet stocks in the early 2000s. It also mentions the potential for trillions of dollars to come on-chain through stablecoins, especially with new legal frameworks like the fictional Genius Act. The video's comparison of crypto and tech stocks is timely, as both sectors are vying for investor attention. The performance of tech stocks, particularly those in the AI space like Nvidia, has been impressive. Nvidia's stock is up about 25.6% year-to-date. Palantir has also seen a significant surge of around 130 to 140% in 2025. This rally in AI-related stocks is a major narrative in the current market. On the other hand, the crypto market is showing signs of a slowdown after a strong run. Bitcoin is currently trading around $109,618, and Ethereum is at about $3,946. The video's mention of the unpredictability of the crypto market cycles is a valid point. The once reliable 4-year cycle seems to be evolving as the market matures and institutional interest grows. The idea of diversifying into crypto-related stocks is also a sound strategy. Companies like MicroStrategy and Coinbase have provided significant returns, acting as a bridge between the traditional financial world and the digital asset space. MicroStrategy's stock has seen a notable increase, and Coinbase continues to be a key player in the crypto ecosystem. The video's long-term outlook for crypto, comparing it to the early days of the internet, is a sentiment shared by many in the industry. The development of infrastructure and the increasing adoption of blockchain technology suggest that the full potential of this asset class is yet to be realized. However, in the latest video from Ben Cowan channel, the discussion centers on Bitcoin's typical behavior during September. Historically, September is a month of consolidation or correction for Bitcoin, especially in years following a halving event. Ben Cowan points to past cycles in 2013, 2017, and 2021 where Bitcoin tested its 21-week EMA, a pattern that he says is repeating in 2025. He notes that the current market is closely mirroring the patterns of 2020. The main focus for September is testing the bull market support band. If Bitcoin's price falls below this level, the next major support to watch is the 50-week moving average. Cowan states he will only reconsider his bullish outlook if Bitcoin closes for the week below that 50-week moving average, which he identifies as being basically below 100K. He also mentions that Bitcoin dominance appears to have found a bottom in mid-September and is starting to climb, suggesting that liquidity is flowing back into Bitcoin. He expects this period of weakness could last for another week or two before things potentially improve in the fourth quarter. Ben Cowan's analysis of September being a historically sluggish month for Bitcoin is playing out, as the broader crypto market has seen a significant downturn this week. Bitcoin's price has been volatile, recently dipping below the $112,000 mark and trading around $111,010. This aligns with Cowan's expectation of a consolidation period. The market is currently grappling with macroeconomic pressures, including fears of a U.S. government shutdown, which is contributing to the cautious sentiment. In the latest video from Coin Bureau channel, Nick discusses the chaos surrounding the U.S. government's plan for a strategic Bitcoin reserve. The whole thing kicked off in July 2024 when Donald Trump announced the idea, followed by Senator Cynthia Lummis introducing the Bitcoin Act to purchase 1 million Bitcoin. By March 2025, an executive order was signed, and the market saw a brief surge with Bitcoin jumping from around $85,000 to over $94,000. However, the excitement was short-lived as it was revealed the reserve would only be funded by already seized Bitcoin, not new purchases. This caused a sharp market reversal. More recently, a Freedom of Information Act request showed that 6 months after a deadline, federal agencies still haven't reported their seized crypto assets to the Treasury. To make matters more confusing, another request to the U.S. Marshals Service revealed they only hold about 28,988 Bitcoin, a number 86% lower than the publicly tracked 200,000 Bitcoin, raising questions about where the rest of the government's Bitcoin is. The video also touches on the mixed messaging from Treasury Secretary Scott Bessent, which led to more market volatility, with Bitcoin dropping from $121,000 to $118,000 after one of his statements. While Senator Lummis's bill to purchase 200,000 Bitcoin annually for 5 years is still on the table, it has a very low chance of passing. The video presents two possible futures, one where the government starts buying Bitcoin, which could lead to a massive supply shock and potentially push the price to $200,000 by the end of 2025, and another where the reserve remains a paper tiger, leaving Bitcoin's price reliant on institutional and corporate demand. The video's breakdown of the U.S. strategic Bitcoin reserve situation paints a picture of political theater clashing with bureaucratic reality. The initial hype was a classic case of the market pricing in a narrative that was far from a done deal. Fast forward to today, and the situation remains murky. While the Trump administration has shown a crypto-friendly stance with the passage of the Genius Act to regulate stablecoins, the grand vision of a fully funded Bitcoin reserve seems to have stalled. The discrepancy in the government's reported Bitcoin holdings is a significant point of confusion and does little to inspire confidence. In the latest video from Crypto's Rush channel, the host discusses a rough day for the markets. He points out that both the tech sector and the crypto market took a significant hit, with Bitcoin dropping to around $109,000 and major altcoins like ETH, Solana, and XRP falling between 5% to 8%. He attributes the panic selling to a stronger than expected GDP report, which has made some people nervous about future interest rate cuts. However, he believes rate cuts are still on the table for October and December. The next big event everyone is watching is the upcoming PCE inflation report, which could either calm the market or cause more bleeding. On a personal note, he wasn't too worried about the downturn because of his focus on a project called the Clash token. He mentions its market cap grew from $2 million to $4.5 million, and he's excited about hosting community tournaments with prizes in Solana. The sentiment in this video certainly matches the current market mood. There's a tangible sense of fear in the air, which is confirmed by the Crypto Fear and Greed Index currently sitting at a fear level of 28. The broad market pullback the host described is very real. As of today, Bitcoin is hovering around $109,804. And Ethereum is trading near $3,963. News outlets are pointing to a cocktail of concerns, including the possibility of a U.S. government shutdown and over $1.65 billion in leverage positions being liquidated, which has intensified the sell-off. In the latest video from Crypto Banner channel, Alessandro lays out a bullish case for the crypto market in the fourth quarter. He points to historical data suggesting that if the second half of September closes in the green, Q4 has an 88% chance of being green as well, with an average gain of 135%. This is supported by a strong macro environment, including the S&P and gold at all-time highs and recent Fed rate cuts. The Altseason index is also flashing a buy signal. However, this cycle is different. It's not about hype anymore. It's about real value. Tokens with strong fundamentals, like BNB, and promising new projects, such as Pump, Fund, and Polymarket, are the ones to watch. He also mentions the potential of perpetual DEXs like Hyperliquid and its competitors. The video warns that tokens without a clear mechanism for value to flow back to holders will be left behind. This is illustrated by comparing Solana's price, which is still below its all-time high, to its market cap, which is nearly doubled due to inflation. He also points to Mantle as a token with built-in demand due to its connection with Bybit. Ultimately, the message is to focus on tokens that are showing strength against Bitcoin and have real-world usage. The video's prediction for a strong Q4 is certainly attention-grabbing, and the historical data about September's performance is an interesting point. However, the current market is showing some mixed signals. Bitcoin is currently trading around $109,410, which is a significant level, but it has seen some recent downward pressure. The S&P 500 has indeed been reaching new highs, but the talk of Fed rate cuts is a bit more complex. While there have been cuts, the Fed is still navigating a tricky economic landscape with persistent inflation concerns. In the latest video from Crypto Casey, she provides a complete beginner's guide to setting up and using the Tangem hardware wallet. She explains that hardware wallets are the only way to truly own and control your digital assets. The video shows how simple the Tangem wallet is, claiming anyone can set it up in under 90 seconds. The process involves tapping one of the 3 provided cards to your phone, creating a wallet in the app, and then backing it up by linking the other 2 cards. A key step is creating a personal access code for security. The video does a great job of making hardware wallets and self-custody seem less intimidating. which is a big hurdle for many people in crypto. Tangem's card-based system is certainly one of the simplest on the market. However, the crypto world is experiencing a downturn, with Bitcoin recently dipping below $112,000 and Ethereum falling under the $4,000 mark. This market-wide correction, driven by macroeconomic pressures and fears of a U.S. government shutdown, underscores the importance of secure asset storage. While exchanges are convenient, holding assets in a hardware wallet like Tangem protects them from exchange-related risks. In the latest video from DataDash, Paul Sampson explains that Bitcoin has erased its recent gains after failing to show significant strength on its last bounce. He points to on-chain data, like declining open interest during the price rise, which suggested the upward move was weak and likely to reverse. Currently, Bitcoin is testing a critical support area he calls the gold pocket. If this level doesn't hold, he anticipates a further drop to the next major support zone around $108,200. To regain bullish momentum, Bitcoin needs to climb back above the previous week's low of approximately $114,400. The technical levels Paul Sampson laid out are proving to be quite relevant in the current market. As of today, Bitcoin is trading around $109,500, having dipped below the $111,000 mark, showing that the support he was watching is under serious pressure. Ethereum has also taken a hit, trading at approximately $3,950, confirming the fight around the psychological $4,000 level he mentioned. This price action aligns with a broader market downturn this week, which has seen over $160 billion wiped from the total crypto market cap. This isn't just a technical pullback. It's being driven by larger economic fears, including the possibility of a U.S. government shutdown, which is making investors move away from riskier assets. We've seen significant liquidations of leveraged positions, which is adding to the downward momentum. Interestingly, while spot Bitcoin ETFs have seen record outflows on some days, institutional interest in the space continues to mature, with ongoing regulatory discussions in the U.S. aiming to provide clearer rules for the industry, such as the upcoming Senate hearing on digital asset taxation. This creates a conflicting picture where short-term price action is bearish due to macro fears, but the long-term foundational work for broader adoption continues to be laid. In the latest video from Crypto Wendy, she discusses the current bearish feeling in the crypto markets, noting that Ethereum briefly dropped below the key psychological level of $4,000. This dip led to the liquidation of about $100 million in Ethereum long positions. However, she points to some positive signs, like the supply of Ethereum on exchanges hitting a 9-year low, which suggests people are holding onto their assets. The biggest news is a major development from the SEC, which has approved new generic listing standards for a NASDAQ crypto index ETF. This is significant because it will allow the ETF to hold crypto assets beyond just Bitcoin and Ethereum. Specifically, this opens the door for institutional exposure to XRP, Solana, and XLM. Wendy believes this will bring much-needed liquidity and new capital from traditional finance into the altcoin market. She remains optimistic for a bullish fourth quarter in 2025, driven by the increasing accessibility of various crypto assets to a wider range of investors through vehicles like this new ETF. The videos focus on the SEC's approval of new generic listing standards for a crypto index ETF is indeed a noteworthy development. On September 25, 2025, the SEC approved the Hashdex NASDAQ Crypto Index US ETF, which will hold Bitcoin, Ethereum, ETH, XRP, Solana, SOL, and Stellar, XLM. This move streamlines the approval process for similar funds, potentially reducing launch times from 270 days to just 75. While the video mentions Ethereum dipping below $4,000, its price is currently hovering around $3,946. Bitcoin is trading at approximately $109,385. The altcoins mentioned are also seeing movement, with XRP at about $2.76, Solana at $195.59, and XLM at $0.354. In the latest video from The Modern Investor, the host discusses the significant and growing trend of corporate accumulation of Ethereum. It's becoming clear that cryptocurrency is now mainstream, with major players like BlackRock involved and ETF applications being approved. The video points out that several companies are not just entering the Ethereum space, but are doing so with the intention of buying up large amounts of ETH. A prime example given is Bitmine Immersion, a former Bitcoin mining company that has pivoted to become the largest corporate holder of Ethereum. According to on-chain data, Bitmine holds 1.86 million Ether, valued at $8.15 billion. The video also mentions other companies, like Altseason, that are joining this race to acquire and stake Ethereum. This trend of companies buying and then staking their ETH is expected to lock up a significant portion of the supply, which could lead to a substantial price increase. The host also touches on the evolving regulatory landscape, noting a more favorable tone from the SEC and a recent joint statement with the CFTC that could pave the way for more crypto products on registered exchanges. This increased regulatory clarity is seen as a positive sign for the entire crypto ecosystem. The video's focus on corporate Ethereum accumulation is timely and reflects a significant trend in the market. The mention of Bitmine's massive ETH treasury is a key point, and recent reports confirm they now hold over 2% of Ethereum's total supply, with holdings valued at over $10 billion. This aggressive buying from a single entity, along with others like Altseason, which is now deploying millions into DeFi protocols like Puffer and EtherFi, underscores a corporate race for ETH. This institutional demand is a strong bullish signal. The video's prediction of a supply shock seems plausible, as these companies are not just buying but also staking their holdings to generate yield, effectively removing that Ether from the open market. This is happening as Ethereum's utility in DeFi, Web3, and for smart contracts continues to grow. In the latest video from Alex Becker channel, he lays out his forecast for the Q4 altcoin season, suggesting the current market pumps are just the beginning of a massive bubble. He believes that as interest rates fall, a significant portion of the $7.3 trillion currently in money markets will move into riskier assets like cryptocurrency. This flood of capital is expected to cause an explosion in altcoin values. Alex Becker presents a very bullish case for the last quarter of the year, focusing on strong narratives like AI, DAPN, and real-world assets, RWA. His theory that capital will rotate from money markets into crypto is a sound long-term view, especially as institutional players like BlackRock get more involved in asset tokenization. The sectors he has identified are indeed where much of the current innovation is happening. In the latest video from Crypto Jeb channel, Jeb discusses a major corrective movement in Bitcoin. He points out that Bitcoin was rejected at the $118,000 resistance level and is now trading below $110,000. This downturn triggered nearly $500 million in liquidations of long positions, catching many traders, including himself, by surprise as they anticipated a continued rally. This video's analysis is a fascinating time capsule, as the price points mentioned, like a $118,000 resistance and a potential drop to $92,000, reflect a market peak from a past cycle. Currently, Bitcoin is trading around $109,385. The discussion of a correction is still very relevant, as the market just saw over $226 million in liquidations in a single hour this week, with Bitcoin and Ethereum longs taking the biggest hit. Bitcoin alone accounted for about $55 million of those liquidations as it slipped below key support levels.